Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is BTS. That's Behind the Scenes, a show that shares with you a sneak peek into the latest edition of the Business Today magazine with all our viewers. Let me welcome all my colleagues joining in on board on this special edition. We have with us Teena, Jain, Kaushal. She is the editor for Money Today. We also have Surabhi joining in. She tracks the economy. She's the economy editor. And we're also joined by Mr. Premchand Palety, the founder and the chief executive of Fore, who's going to be sharing a special data point that's been covered in the BCI, C4 index coverage that tracks the business confidence, which is our quarterly survey that we do for the magazine as well. Warm welcome to all of you and thank you so much for taking the time out for this discussion. We'll kickstart this conversation with Teena since she's done the cover story, and before that I'm going to be showing you a glimpse of the latest edition. I already have my copy in my hands, viewers, and the cover clearly is all about how insurance is taking off. But why are we doing insurance story as a cover story is something that Teena will help us understand. Teena, welcome. Do tell us what's the action around in the insurance space. Why do you think right now everybody is talking about what's happening in the world of insurance?
Hi Sakshi, very genuine question. Why insurance at this point of time? Actually, we had a very detailed conversation around the insurance sector in the newsroom, and we decided to do it as a cover because so much action is happening in this sector right now. So there is not one but multiple factors. So if I can begin with, the largest ever insurance deal has been signed between Bajaj and Allianz. Allianz has exited from both the general and life business of Bajaj. So it's a big deal where a deal of around rupees 24,000 crore, which says that insurance industry has grown up in so many years. From 2000, when the insurance sector was liberalized, we have come to the point when the insurance company has grown and is capable to do the operations itself. So the complete exit of Allianz from Bajaj is a big news, and it was one of the trigger points. Can it lead to more exits? Can it lead to more mergers and acquisitions? That was one of the questions to be answered we were looking for. Another reason was this deal has happened at the time when FDI has been increased in the sector to 100%, and the sector was liberalized in 2000 when the 26% FDI was allowed. Till 2025 now 100% FDI is allowed. So how the sector will change after 100% FDI will come into the sector? So far we have seen around 83,000 crore FDI investment in the sector, but now when 100% is allowed, will more companies, foreign companies come up? The answer is to be seen, because when FDI was allowed from 49 to 74%, limited number of players increased their FDI limit. So now when it is increased to 100% from 74%, how much action can we see? It is to be seen. But one thing is for sure, that foreign players will have lot of room. Earlier they were looking for domestic partners. Now there is no need for domestic partners. They can have full scale company over here. They can buy out or they can increase the stake in the existing company. So lot of room for foreign players. And the third factor, if I can quickly say, was the proposed composite license. It is still to be tabled in the parliament, in the act, but once proposed composite license come, again there will be lot of shake up in the industry, because it will help life and general insurers to cross sell their products. So it will lead to many efficiency in operations, and it can again churn the industry a lot. So that was the reason that we decided to do a cover story on insurance sector.
Absolutely, Teena. Thanks for setting that context right for our viewers to really understand at this point in time why they also need to focus on what are the changes and the big things that are happening in the world of insurance. How could that really reshape the industry and for the many years to come? But do tell me, you are interestingly pointing out whether the change in policies and the stance that the government has, more and more foreign players could be interested in either buying out Indian firms or increasing their stake in the current players. So are you expecting a lot of foreign players entry into the markets? What are the big names that could enter?
So definitely we are expecting many foreign players to come into the market, And we have already seen Prudential announce that they are coming into the health insurance market, which is a big player outside. And LIC has acquired, is in discussion to acquire Manipal Signa. That is also a big merger when it takes place, big acquisition if it takes place. So, lot many players are eyeing insurance sector. And Sakshi, the insurance industry is very different from the 2000 when the sector was first liberalized. Yes. Now foreign players will come, that is one thing, but the another part we need to look at is the homegrown companies will also have a big chance to show their talent now, because in 2000 they were dependent on foreign players for the know-how, for the claim management, for the expertise of insurance sector. But now insurance companies have grown so big, we have so much skilled knowledge over here, employees also. So now it's a time of startups also to show homegrown startups also to make a mark in the insurance industry. So it will be a mix of both foreign players and the domestic players, I will say. But in case of foreign players, I will like to say that whoever comes into the Indian market, if they come 100%, they have to see at the distribution side, because India is a distribution led business. So whoever comes into the market, they have to have their distribution strategy right. If they are planning to have their own distribution, they need to deploy a lot of capital in the market, or they can buy out any company with a strong distribution network. So foreign players coming into India have to look at the distribution network, and also they have to bring innovative products to go deeper into the Indian market, because metros are already very over penetrated. So if they want to go into the tier 2, 3 market, they have to bring the affordability, they have to bring the innovation to bring these to bring more people buying insurance policies in the country.
Absolutely. Now, just the last point, Teena, before I go ahead and speak to Mr. Palety and to Surabhi as well on the Business Confidence Index, just wanted to ask you on the composite license. I think that's the most interesting aspect that all the, people are watching out for as to how that will reshape the way, things have been divided between, life insurance providers as well as general insurance providers, since both will be able to cross-sell each other. How are things going to shape up? Is it going to be a win-win for both?
Yes, actually there are many promoters who have both life insurance and general insurance business. So once the government allow them to have a composite license, they can have many things to look at. They can combine their fund management division, they can combine their HR division. So many operational efficiencies can take place.
Yes.
Similarly, companies which are only into life or only into general, and they have good distribution model with them, it can be a great chance for them to go deeper into the society and increase the insurance penetration, because with the same distribution network they can sell the general insurance products also, especially health insurance. We know that how health insurance demand is growing in the country. So it will definitely help both general and life insurers if the proposed composite license come into being.
Fair point. We'll continue to watch out for. I think this place is only going to be getting more excited for you, Teena, because there'll be more and more M&As that could be announced. There could be more entry of foreign players, new emerging homegrown players like you marked out, and of course the developments on the composite license as to how that takes shape and any challenges on that front as well. So it's going to be a buzzing space for you to really track. I hope all our viewers largely benefit from understanding which way is the insurance industry really taking shape. Now let me just talk about our Business Today C4 Business Confidence Survey of 500 CEOs and CFOs for the March quarter. It's a quarterly survey that we have done, but importantly this time around as a key metric that we are watching out for is that the index has dipped below 50 mark for the first time since 2021. That means in 4 years for the first time you're seeing the index dip below 50. Let's try and understand from Mr. Premchand Palety, who's the founder and chief executive of C4, who's helped us do this survey, what exactly the index slipping below 50 really means. What does it signify, sir?
It means it is very bad. The business confidence level is very bad as of now. See, we administer a structured questionnaire to CEOs and CFOs, and we ask 10 questions, and each pertaining to the business confidence level.
Okay.
So we ask them to rate on 10-point scale the business confidence. So anything below 5 which on a rating scale of 10, anything below 5 is bad. So a rating of 47.7 means the average rating is below 5, which is very bad.
Okay, so sir, help us understand, what do you think have you found out in the survey has been the key reason for the dip in the business confidence of India Inc.
It's the slowing domestic demand is that's what they said is the prime reason for lowering of business confidence.
Okay, now Mr.
And
Palety,
then those who are
yeah,
those who
yeah,
are in exports, especially US, the
yes.
tariff issue is also a matter of concern.
Absolutely. So one is the slowing down of domestic demand that is deterring the business sentiment, and globally, because of how the tariff talk is progressing, is another question, because one cannot foresee as to how can one pan out the exports going forward till the time the policy changes are not certain. Now, Mr. Palety, also help us understand, what do you think about the current quarter that we are in, the April to June quarter, since there is also this geopolitical tension impact that could actually come in here.
Yes, so this could even worsen the situation. So, but we will come to know in coming days. But as of now, the business climate is not good, favorable, not favorable.
As of now, the business climate is not favorable. Let me actually go across to my colleague Surabhi now to help us understand what could be the impact in case the business confidence index displays that right now the confidence is lower. Right now, the business climate does not look good. External shocks pertaining geopolitical tensions could further, probably create more problems in the April to June quarter as well. Now, do help us understand. Surabhi, what do you fathom from this current, index reflection of business confidence being at a low, especially due to the demand slowdown that we are seeing?
Yeah, hi Sakshi, thank you for these questions. Like Mr. Palety pointed out, there's a lot of what I would say sense of caution and conservatism in India Inc. because no one knows how the external situation will pan out. The US is a really big export market for us, and how it works on its trade policies, its tariff policies will obviously impact the overall global economy. There are concerns about a recession coming on. So everyone wants to hold on to their cash and be really conservative with what they plan. So slowing domestic demand in this scenario is of course a concern because India is also coupled with the global economy. We've seen almost all GDP estimates that have come in. They expect growth at 6.5% or even less than that. And May 31, we'll get the figures for the last fiscal 24-25. I'll give us a sense of how it was last fiscal and also how things are going to pan out this fiscal. Now, when we talk about slowing domestic demand, so that's obviously going to be impacted by the global economy. We're seeing sectors like IT, etc., which have already been down, and it is expected to go down further. Manufacturing also, companies are, despite the RBI rate cuts, etc., two rate cuts we've had already this year. But when we asked them on whether they would like to do any capital investment plans this year, most of them said that they are not thinking about it on those lines right now. Even the inaugural capex survey, which the government had come out with recently, showed that there's about a 25% dip in sentiments of capital investment. However, we must realize that India continues to remain, a domestic-led economy. We have a huge consumer market, consumption market, and the tax cuts announced in the union budget of about 1 lakh crore for income tax, as well as the expectation of a normal monsoon. Both of these are expected to give a boost to domestic demand, especially the rural economy. So we have to see how that pans out going forward.
Absolutely. But do tell me, I think, Mr. Palety did point out was that one of the key concerns that, India Inc. had and the top CEOs had was on the ongoing tariff talk. There has been a significant worry of, if there is a trade war and what happens to then the exports. But of late, what do you think of this 90-day pause? What are businesses thinking about that? How are they strategizing their fresh moves? Now there is some further development on US US and China front, where things were expected to go worse, things have turned out rather well, much better than expectations. US has reduced, the tariffs to 30% from what was being seen as initially for 145%. China has reduced it to 10%. So there is a softening of stance between US and China, but rather things are probably getting delayed on the US-India front on that matter. How are you looking at all of this?
So the 90-day tariff pause was, of course, a very welcome relief for everyone, and exporters and manufacturers who were trying to rush their shipments before the tariff came into effect have actually breathed a sigh of relief. Orders are still coming in for India. A lot of exporters are saying that India is being seen as a more stable and attractive market compared to others like China and Vietnam, where there continues to be some uncertainty with regard to US tariffs. So in fact, some exporters are now have indicated that their order consignments, export consignments have increased. But yes, most companies are still strategizing on what to do. It's still early days. Remember, the 90-day pause is still July 8 or midnight, and in between we are seeing a spate of these, rush of negotiations on free trade agreements, and India and UK have concluded theirs. UK and US have concluded theirs. Then there's another, trade talks going on between US and China. So it's just trade everywhere. Every morning there's new developments happening. So trade is a big thing. But interestingly, domestic industry is still concerned. And one of the findings we found in the survey was that an overwhelming majority want to make sure that their markets, their exports are protected, and they want some kind of a safeguard built into all trade agreements.
Absolutely. Well, Surabhi, thank you so much for all that update. And thanks also to Mr. Palety for making this special appearance on our special show BTS and explaining to all our viewers the key, insights that we've got from the survey this time around. Things do not look good at this point in time, but everything is in a wait and watch situation as far as the business confidence is concerned, looking at the uncertainties that we are grappling with. And of course, insurance sector is up for some kind of changes that are going to be impacting the way industry functions, the way insurance industry pans out over the next many years to come as well. So this is going to be now of extreme importance to see how the industry is taking shape of the next 6 months or 1 year kind of a time frame. So thank you so much, Teena, for all that update as well. With that, viewers, we wrap up on this special edition, but do stay tuned on to Business Today Television. There's a whole lot more that you need to catch up on.